Okay, video two of the patterns. There's only I think three videos for my favorite patterns. Second favorite pattern is called a bear flag. This is only in a short scenario. They do have bull flags as well. I just don't like using them as much. So I'm going to teach you what I use and what works for me. Okay. This is you're going to use this in a scenario when you're selling. You know, we already know we're in a seller's market. We're already looking for shorts. This can be added on as a one last extra confluence. Okay. What is a bear flag? Bear flag is basically, it's basically just a push down, as you can see here. And then market will consolidate back up, and then it will just break that flag and come down. So it's kind of like how I've drawn here. Okay, we'll get a strong leg pushing down. We already know this. Like, we're already going to be watching this leg. We know this. We may have taken the trade down, and now we're looking for another entry. We may see this has already happened on the charts by the time we get there. It's a strong push down. This is the pole of the flag. And then market will just push up into, you'll have to find a good supply zone right up in this area, wherever it's gonna, once you see the pole, the push down strongly, you identify on your 30-minute, 15-minute, potentially the hour, a good supply zone, and you draw it out. Once you draw it out, I use the trend line just as a visual representation for myself to know, okay, we are in a bear flag. When price pushes up into my supply zone, I'm entering this trade, because the chances of it breaking down like this are very high. The chances of breaking down into this, like this, are very high. I'm going to show you guys on the GU chart again some examples. Okay, come back to these patterns at a later date. Okay, they don't look as clean, obviously, on the charts, but we have this big push down. This is the pole, big push down. We know we can't really get an entry up in there. It's such a strong push. But look, even on the hourly, that one candle is enough for us to draw that zone out. Okay, and let me see if I can do bar replay. Okay, if this was me on the chart, we know we're in a downtrend. Look at the structure that was broken all the way here. You could have probably taken this trade down, fine. But let's say this is where you were at that moment. Perfect example. We push back into our supply. We see the pole. We know this is a bear flag. We've broken structure as well here, as you can see. Hourly candles close below. We don't really see too many wicks or anything. We might see them in the lower time frames. And you may have already entered this trade up in here. And it may have knocked you out at break even. But if you weren't, this would have been a great trade. I would have personally taken this trade because I see such a strong bullish candle pushing into our zone. Actually, I wouldn't have taken this trade because this was too strong of a candle into our zone. And I'm going to get into one of those videos again, showing you we don't want to take too many trades. We don't want to take a trade where, it pushes down and then one big candle pushes into our zone. We want it to kind of chop its way back into our zone. This would have been great, right? You get a little bearish candle, then you get a bullish candle, wait one more candle, wait one more candle. As soon as that one breaks, you're in, because you already know this is a bear flag. You know it's breaking down. Even if you want to be safe, leave it up there and target the lows right here. To be safe, you get a 2.6% risk to reward, and you leave a runner. And I'm pretty sure this would have just been smashed right through, right? Boom. These type of trades will smash TP quick. Like, you will smash TP quick on these trades. Let's see if we can stop that. Right. Okay, that was the one we just saw. No, that was not the one we just saw. Many more examples over here. If this will load. Okay. I think this is the one we just showed an example of. Here's another one. Big, strong push down the pole. If you go down into your 15-minute time frames, you'll find a supply zone right up in here. 100% we'll find one. I just don't want to have to keep going back and forth on the charts. So that was another. So when we know we're in a strong downtrend, keep looking out for just supply zones. Look for the pattern. Like this is the pattern right here. Push, push, push. Very easy, right? And then yeah, again, potential right there. That's the supply zone for us because we have this, bullish candle on the lower time frames. We would have drawn it out here. We would have drawn it out somewhere here. Boom, entered. Yeah, entered. Taken down again. Okay. Maybe you would have drawn this later and you wouldn't have gone stopped out. See? All right. A lot of people will ask me this question later. We have a supply zone. Why didn't price stop here? It didn't. Look at how strong the candle was when it pushed up into our zone. Why would we even take this trade when we're watching a big candle like this just smashing through our zone? We won't take it. Why would we? We'll just wait till we see some bearish action and, candles breaking. Come back. If you don't feel comfortable with the 15-minute, stick to the hourly. You're just going to be much safer. You're going to be much safer, okay? Here was the zone above it where we actually do see wick, wick, break of the candle, break of the next candle. Get all the confirmations you need, man. Get all the confirmations you need. And this could have just been a big flag. A big flag, okay? You waited. You saw that this candle was too big. We're not entering. You waited for the right one. You let an hourly candle print. This is kind of like the 3-pin formation happening here. Just to be safe, you went, okay, let me wait for another candle. Bearish candle happened. That broke the low. Boom, you're in. Let's go. Stops very tight, right up in there. And your first TP would have been here. Your first take profit on this would have been, and you wouldn't even have gone stopped out or break even. Your first TP would have been a 1 to 6. A 1 to 6. Okay, and if you left a runner, like half a percent or something, 1 to 10. 1 to 10. So you'd have gotten 6% from your 1% entry, and 5% from your 0.5% entry. So that's like a past challenge right there. That's a lot of money on a 100K funded account. That's like with 80% profit split. That's like $8,500, $8,000, $7,000. So just be aware. The power to make money is there. I've proven it. I've done it. Like I've literally done it. That's the only reason I'm teaching this, is because I've done it, and I've done it over and over and over again. That's why. Why else would I quit my job for no reason, right? I know the power of this strategy. You just have to practice, and slowly you'll start picking up on these patterns. Like your eyes will just start like, okay, boom, we're in a bear flag. Let's get in. I'm gonna find my right supply zone. I found my supply zone. Those are the candlestick entries. Boom. You're gonna start smashing these trades out the park. Slowly. It just takes time, man. It just takes time, okay? Don't think that you found a good strategy and now you can just start going crazy. Don't do that. Take your time. The markets aren't going anywhere. FTMO isn't going anywhere. Nothing is going anywhere. Spend the first 15 days back testing. Spend another 15 days forward testing. Find these patterns on the charts. Get better and better and better, and slowly work your way into that, okay? We're going to move on to the last pattern video, my favorite pattern, and then we're going to move on.